CNBC TV 18, embarking on a quarter century of excellence.
The year-end rally resumes on Wall Street as stocks recover from their worst day since September. Third quarter GDP comes in at 4.9% versus expectations of over 5% growth. Stocks in the Asia-Pacific open largely higher, with the headline inflation in Japan slowing to its lowest since July 2022. The GIFT Nifty is indicating a positive start for the Indian market. Crude prices settle lower, with Brent around $79 a barrel. Angola says it will exit the OPEC, raising questions about the group's efforts to support prices by limiting global supplies. And the Finance Ministry will hold a meeting with PSU banking heads to review their performance today. On the agenda is delayed resolutions and low recovery rates in IBC cases. Export restrictions on agri products will lead to a $4 to $5 billion decline in exports this year, say government sources. Indian government has imposed curbs on items like rice, wheat and sugar in a bid to keep domestic prices in check. LIC gets 10 years to comply with the SEBI rule mandating 25% public float. Government grants a one-time exemption to the company. More than 25% of the PSUs are yet to comply with the public shareholding norms. Good morning and welcome to Power Breakfast. I'm Pavitra. Those are the top headlines. This is the final trading session before we get into the long weekend and the Christmas weekend. So in advance, wishing all of you a very, very Merry Christmas and season's greetings from the entire team here at CNBC. That said, you know, the handover has been quite merry as well. The global markets have sort of really come back after that one day of pretty severe decline that we did see. So on the back of that, you have most Asian markets which are trading in the green right now. It's not been the best week for Asia, but today at least things are looking quite all right. So the Nikkei market leading the gains right now. It's an 80-point gain over there. You have Hang Seng, which is seeing around 0.4% in terms of a pop at the open. Taiwan also up similar, around 0.4% there. And for most of them, you know, you're seeing at least some amount of green come through. I do want to point out that for the week, the Japan markets, the Hong Kong markets are still right now in the red, about 1% in the red for both of those indices. For our own markets, the implied open will come up, and after that big recovery that we saw intraday yesterday, it is indicating that the start for our own markets will be in the green. Around 30 points higher is where we're at on the GIFT Nifty. But let's also talk about the US markets now, because like I mentioned, Wall Street ended higher, reversing from the previous session's sharp fall. The Dow added over 320 points. The S&P 500 was up over 1%, and the tech-heavy NASDAQ index also gained around 186 points at the end of the trading session. In fact, it was quite a broad-based rally that we saw, with chipmaker stocks really leading the gains yesterday. You know, this came through after chipmaker Micron Tech topped their quarterly expectations. And in fact, even the guidance that they have provided now is better than what they earlier expected. So that is something that did really well, and it took the entire chipmaker pack up with it. You have sneaker giant Nike also, which is in focus, and that stock actually saw quite a rough session. It was down around 10%. This because the company cut their sales outlook. The management now plans to cut $2 billion in costs over the next 3 years. So Nike down, but overall it was a good session that we saw on Wall Street. Sticking with the US, you know, the big cue that we were all waiting for is the Q3 real GDP numbers. It actually came in a tad lower than expected. So what we got was 4.9%, and the expectations was of 5% growth. So we have Rick Santelli now to bring us some of the finer details. Rick.
5.2 is our last look. A second look at third quarter GDP. It drops 0.3 back to where it was at 4.9%, which is pretty unusual to see this size revision on the third look. Consumption remains at 3.6, and 3.6 is pretty darn healthy on the consumption side. If you look at the price index, it also remained at 3.6. And do remember, that is one of the few metrics that really popped out. You know, the second quarter was 1.7, so we basically doubled it back to 3.6. It's going to be interesting to see how the fourth quarter dabbles through. Personal consumption on the core side, price index quarter over quarter also remained at 2.3, which, by the way, is the lowest core PCE quarter over quarter rate of change going back to the last quarter of 2020 when it was 1.8%. Let's do initial claims, shall we? Well, they are down, they are down from what we expected, but they're up from a 203 revised last look, now becomes 205,000. So Theoretically, we're up 2,000 on initial claims, but we're 10,000 lower than most economists anticipated. We're looking at the 215 to 217,000 range. On continuing claims, a little bit light on expectations and very close to our last look, 1,865,000. That's pretty much a push with last month, and it really does underscore that the last time we were above 1.9 million was the second week in November, and we haven't been anywhere really near it since. And that particular number was the highest going back to November of 21. So you could see 1.9 remains elusive, and it's a very important psychological area to pay attention to.
Okay, Rick, thanks a lot for breaking down all of those numbers for us. I also want to bring you some opinion. This comes in from Bob Dahl of Crossmark Global Investments on where he really sees the markets heading in the coming year, in 2024. Check it out.
All the momentum, it points to the upside. And of course, the fundamental belief that the Fed's going to lower rates 6 times, according to the futures curve, in 2024. And that's got investors excited. The path of least resistance continues to be the upside into the new year. You know, earnings are already expected to be up a double-digit percentage next year. I think that's a bit of a stretch, given the slowing we're seeing in certain parts of the economy.
Okay, some more opinion that we are getting as well. This comes in from Morgan Stanley's outgoing CEO and chairman, James Gorman, as he spoke on how he finds more global opportunities for deals and plans for the company to conduct more international deals in the future. Listen in to what he said.
I think that we are more likely to do more non-US. We've been very long the US. All the deals we've done have been US-based. Now, that's served us incredibly well. And by the way, if you want to be long one market in the world, I'm USA, team number one. But you have to be aware that the world changes. There are opportunities that are opening up. What's going on in India at the moment is fascinating. The sort of reincarnation in Japan for the first time in 40 years is fascinating. So you've got to be mindful of global opportunities. So I think we'll do more deals we'll certainly do deals.
Okay, that is all of the important opinion that we are looking at from the global front. Let's now talk about all of the cues that you should track as we get into this trading session. Mangalam, Vivek, Hormaz are all here to take us through the trade setup as we see it this morning. Guys, a very good morning to all of you, and everyone's looking festive, guys. Merry Christmas to all of you in advance. Vivek, coming to you first. The handover has been good as well, right? I mean, it looks like that spirit is really spreading across the global markets.
Well, absolutely right. Season's greetings. So what's actually happened is that yesterday turned out to be the day where you did see a bounce back across most of the equity markets after the steep sell-off that we saw day before yesterday. So, like we mentioned, in the US markets recovered quite sharply. And in fact, now the US markets are on track for the 8th straight week of gains that we will see. Talking about crude oil prices, yesterday crude oil prices marginally fell. Now remember, Angola has decided to exit the OPEC, and on the back of that, Brent futures now trading lower than the $80 a barrel mark. Now talking about Indian markets yesterday, post the steep sell-off that we saw on Wednesday, and yesterday's opening too was quite weak, but a very, very sharp recovery came intraday across all indices, and in fact, it was the heavyweights in the Nifty bank, that was the HDFC Bank as well as SBI, that actually helped the markets recover quite sharply. Now, talking about the mid-cap and small-cap indices, very, very sharp recovery there too, both of them ending well in excess of 1% for the day, and so that kind of indicated the kind of buying at dip that we are seeing across the market. Now, also, one key pack yesterday, the diagnostics company, they turned out to be amongst the top gainers. And today morning, Asian markets have taken strong cues from overnight markets, so they too are in the green, if Nifty too indicating a positive start.
Okay, positive start. Let's see how we go from there. Vivek, thanks for that. Let's also talk about all of the individual stocks that you should track. And Vivek and Hormaz is here to help us with that. Hormaz.
Morning, Pavitra, and I'll start off with a big one, that is LIC, where the Department of Economic Affairs has granted a one-time exemption on the minimum public shareholding norms, and now it can achieve that 25% threshold by May of 2032. So we'll keep that on our radar. All Cargo Logistics will demerge its international supply chain business into All Cargo ECU, and the remaining entity will hold the express and the contract logistics business. Now, shareholders will get one ECU share for every one All Cargo Logistics share that they hold, and the All Cargo Gati shareholders shareholders will get 63 shares of the remaining entity for every 10 that they hold. Zomato has denied news reports of that they are acquiring Shiprocket. They said that they have no plans of any acquisition as of now, and the focus remains on the core business. GMR Airports, where the NIIF is going to invest 675 crore rupees at its Bhogapuram airport in Andhra Pradesh. Keynes Tech closed its QIP, raised 1400 crore rupees from that, and Nippon India, AMC, HDFC, MF, ICICI Prudential were some of the funds that were allotted shares in that. Tata Motors, where the exchanges have issued an NOC for the cancellation of its DVR shares, part of the process. KPI Green has raised 300 crore rupees through its QIP. The issue price of 1183 is a 5% discount to its floor price. Railtel has won a 66 crore order from the NF Railway Construction, and lastly Angel One, which will consider its third quarter earnings, but more importantly a dividend on the 15th of January 2024. Back to you.
Okay, so lots of news in these individual names as well. Ormas, thanks a lot for that. Finally, it's over to Mangalam, who's looking at cues from the futures and options space. Mangalam, we were just briefly talking about how there was such a big intraday recovery yesterday. Take us through what we should track this morning.
Well, after a day of fall, we saw a day of recovery, and that recovery was pretty sharp and more pronounced in the second half of trade, particularly in the last hour itself. So if you just take a look at the Nifty as well as the Nifty Bank, the Nifty did keep seeing a few jumps through the trading session, but the Nifty Bank, look at that. Post 230, a big up move is what we saw in the Nifty. Closed around that 21,250 mark. A lot of the call writers were positioned for an expiry around that level itself. But the bigger move came by in the mid-cap index. The mid-cap index saw a sharper surge of almost 2% at an index level, and the advanced decline charts would tell you the story of the day, where we started with more stocks declining and ended with way more stocks gaining than the number of stocks which fell in yesterday's trading session. Institutional flows in the cash markets, well, they were netting each other off, but gross volumes were again lower, below 10,000 crore from both the FIs and the DIIs as we close the books towards the end of this year. But there was constant purchase in index futures by the FIIs itself. They covered some short positions. They bought about 212 crores and they covered 7,500 short contracts. That means that the longs have now inched to 67%. Two-thirds of the FII positioning in index futures are on the long side, so that's something we'll be watching out for. Who are the ones who unwound their positions? It were the clients, the HNIs and individual clients. Just keep an eye out on the net longs for the FIIs. It's near 90,000, so that's a mark that we have to watch out for in terms of it being a little overbought.
Okay, Mangalam, thanks a lot for laying out all of those cues for us. That is the trade setup this morning. But with that, we are going to get into a short break. On the other side, like we told you, export restrictions on agri products will lead to a $4 to $5 billion decline in exports this year, according to government sources. So we'll bring you all of the details on the other side. Welcome back. Here's an important story. Government sources are telling us that export restrictions on agricultural products are likely to cost Indian traders up to $5 billion. Adding to their concerns are also the attacks that we're seeing on cargo ships in the Red Sea area, which could hurt exports of basmati rice. Abhimanyu joins us with more on this. Abhimanyu, what are you picking up?
Well, trade restrictions on several essential items like wheat, sugar and rice may lead to a drop in exports from India worth 4 to 5 billion US dollars in the current financial year. Also, the current spate of attacks which have been mounted by the Houthi rebels located in Yemen, they may also adversely impact India's basmati exports to several Western countries, as India may have to change the route of export, and the ships which are carrying basmati rice may have to take a longer route through Africa, which is possibly going to raise the cost by 15 to 20%. This is what government sources have indicated. However, the government is hopeful that the rise in the price of basmati exports is not going to adversely impact demand of Indian basmati. On the other hand, the government is also looking to enhance the export of several fresh fruits and vegetables, for which a new sea export protocol has also been developed, in which it is going to be considered by the government to ensure that there is no spoilage of any fruits and vegetables, even as India is targeting several Western countries, including the United States of America, as far as exports of fresh fruits is concerned, particularly bananas, in which India is looking to increase the export of bananas from the current kitty of 174 million US dollars last year to over 1 billion US dollars per year in the next few years.
Okay, Abhimanyu, thanks a lot for getting us the details on this important story. But something else that I want to update you on is that the Finance Ministry is set to meet the heads of PSU banks for a performance review. Now, discussions are likely over delays in resolution and low recovery rates under the IBC as well. So all banks will also present a report on the issue of NPA management and give a report on all cases pending under the National Asset Reconstruction Company. So, of course, we'll bring you updates and any highlights that we can from this meeting once it is through. But with that, we are going to get into a short break. On the other side, we're going to shift focus, talk all about the commodity space. Manisha will be with us to fill us in. Welcome back. You're still tuning to Power Breakfast. Let's get a check on what's going on with the commodities. Manisha joins us now. Manisha, good morning. There seems to have been a bit of a rise in crude prices once again.
Oh, well, yes, $80 a barrel in sight right now, but we haven't been able to sustain above that. And while there is support from the fact that the Houthi attacks in Red Sea are leading to tankers taking longer routes, but remember, when it comes to crude oil, and while, of course, this is impacting the grains and coal, etc., but much of crude oil is exported via Strait of Hormuz, and there's no problems there. So on ground, there is no supply issues. Apart from that, the markets are now doubting the OPEC ability to tighten the markets, and Angola leaving OPEC as it does not serve its interest. Angola has not wanted to cut output as per the quotas given to it by the OPEC is something that seems to be weighing onto the markets. It's keeping the prices in check. Also, what is keeping the prices in check is the U.S. production at record 13.3 million barrels per day. So the crude oil price is clearly headed for the first annual decline since 2020 as we see the prices right now. But what has seen very smart gains overnight has been the U.S. natural gas prices, 6% overnight, and this is because of the bigger than expected draw in the storage capacities.
Okay, Manisha, thanks a lot for getting us all of those details. With that, we also have to bring you some very grim news as well. A mass shooting at Prague's Charles University has left at least 14 people dead and over 25 injured in what is one of the deadliest mass shootings in the history of the Czech Republic. Local police said they were responding to a shooting near the city's Old Town Square before reporting that the gunman was eliminated. The Prague City Police said that the attacker was a student. Local authorities have warned that the death toll could rise even further, and the government has declared a day of mourning on the 23rd of December to remember the victims. Right, extremely tragic news coming through from Prague. But with that, we're going to wind down in this edition of Power Breakfast. Thanks for tuning in. We have Bazaar Morning Call up into.
CNBC TV 18, embarking on a quarter century of excellence.